Welcome back to the deep dive. Today we're going to be diving into dividends.
Yeah,
Dividends are kind of a fascinating area of investing because, so many people are focused on just
growth.
growth, and selling those stocks later. But dividends offer something a little bit different,
Yeah, they do. You think about dividends as a way to generate an income from your investments,
right?
right? So instead of, waiting to sell a stock, hoping for it to appreciate in price, you can actually get paid
Regularly,
regularly just for holding the stock.
like a bonus.
Yeah, exactly. Like a bonus just for being a shareholder.
Yeah. And what I think is really appealing about dividends
Yeah,
is that they're, they're often treated more favorably from a tax perspective
absolutely.
than, just selling a stock.
Yeah, you're right. Dividend income, it's often taxed at a lower rate than the profits you'd make from just selling shares.
Yeah.
So it can be a really tax efficient way to kind of build your wealth over time.
Now, for people who are kind of maybe intimidated by the idea of picking individual stocks,
Right.
where's a good place to start if they're interested in exploring dividend investing?
Well, one of the best places to start is to look at companies with a long history of sharing their profits with investors.
Okay.
And a great resource for that is the Dividend Aristocrats List.
Dividend Aristocrats. Now that sounds
Exclusive?
it sounds pretty exclusive. What makes these companies so special?
So dividend aristocrats are companies that have increased their dividend payouts for at least 25 years
Wow.
consecutively. So this means that they have a proven track record.
Of consistency.
Yes, of consistency. They are committed to rewarding their shareholders.
25 years straight. That's pretty impressive.
It is. And, it really suggests that they have a history of stable profitability.
So we're talking about big name companies that people would recognize.
Absolutely. You'll find some iconic brands on this list, companies like Coca-Cola. They're known for their global reach and their, refreshing dividends.
Yeah.
Or Johnson & Johnson, a healthcare giant with a diverse portfolio and a history of steady payouts.
So, it sounds like these dividend aristocrats, they've weathered a lot of storms.
They had.
They've still managed to, come out on top and keep increasing those dividends.
Exactly. They have a proven track record of navigating different economic cycles and still rewarding their shareholders.
But I imagine, not all dividend stocks or ETFs are created equal.
Oh, that's an important point.
Yeah.
While dividend investing can be a really powerful strategy, you have to remember that not all dividend-paying companies are the same.
So it's not just about chasing the highest yield.
No, not at all.
You've got to look for quality companies as well.
Exactly. Some companies might offer a really enticing high dividend yield, but they might not have the financial strength to actually sustain those payments over the long term.
Yeah, you want something that's going to last.
You want sustainable income.
Yeah.
You want companies that can keep those dividends flowing.
So it sounds like, when you're looking at dividends, you really want to focus on companies with solid fundamentals. Strong earnings growth, strong cash flow, manageable debt.
All those factors are crucial. They indicate the company's ability to not only maintain, but potentially even grow their dividends in the future.
So it's really about, digging deeper into the company's financials.
Yes,
Not just looking at that dividend yield.
exactly. Due diligence is essential, even when you're focusing on dividends.
Okay, so we've talked about, the appeal of dividends,
Right.
these dividend aristocrats, the importance of looking beyond just the yield and digging into those financials.
Yeah.
But now I'm thinking about the risks. What happens to these dividend-paying companies when the market takes a downturn?
Right.
Like during a bear market.
Right.
Do those dividends just dry up?
That's a great question. And it brings us to a really important aspect of dividend investing, its potential resilience during market downturns. Bear markets, they can definitely be unsettling for investors. But it's often during these times that dividend-paying stocks, they can actually really shine.
Okay, so tell me more about that.
Well, you see, even when the market is, going through a downturn and stock prices are falling, many companies, they can still be generating profits.
Okay.
And they can continue to pay out those dividends.
Okay.
So these regular payments, they provide a sense of stability and income even when the overall market feels shaky.
So it's almost like a safety net.
Exactly. It's like a
Yeah.
safety net in a storm, you're still getting paid.
Yeah, that makes sense.
Even though the value of your investment may be fluctuating and, it goes beyond just a feeling of stability.
Okay.
Dividend reinvestment during a downturn can be an especially savvy strategy.
Reinvestment.
Is
Okay. So explain that to me.
Sure. So imagine the market dips, right? And the price of a stock that you own goes down.
Right.
but it's still fundamentally sound.
Yeah.
And it's still paying out those dividends. Now, when you reinvest those dividends during this dip, you're essentially buying more shares of that stock at a lower price.
I see. So you're getting a discount.
Exactly. You're getting more bang for your buck.
Yeah.
And when the market eventually recovers, which historically it always has,
Right.
those extra shares that you acquired at a discount, they can really lead to some significant returns.
Oh, wow.
So it's like turning a temporary setback into an opportunity for growth.
Yeah, it almost makes those dividend aristocrats seem like superheroes of the investing world.
Well, they definitely have a certain appeal. They've proven their ability to weather storms and reward their loyal shareholders.
Right, but I imagine even superheroes have their limits, right?
Yeah, they're not completely immune to the forces of a really severe market downturn.
Okay.
In extreme situations, some companies, they might have to reduce or temporarily suspend their dividend payments
I see.
to kind of conserve cash and navigate those tough times.
So it's not a foolproof guarantee.
No.
But it's more like a really strong indication of a company's resilience.
Exactly. And their commitment to their shareholders. But that's why due diligence is so important.
Mhm.
Even within the Dividend Aristocrats list, it's crucial to look beyond just the dividend history.
Oh.
You want to dig into the company's financials, look at their competitive landscape, and, really assess their long-term prospects.
So diversification and careful research,
Yeah.
they're still key.
Absolutely.
Yeah.
A well-diversified portfolio spread across different sectors and different companies can help mitigate risk and potentially enhance returns. It's all about finding that balance between seeking that steady income from dividends
Yeah.
and building a resilient portfolio that can handle the ups and downs of the market.
So as we wrap up our deep dive into the world of dividends, what's one key takeaway that our listeners should keep in mind as they explore this investment strategy?
Well, I think for me, the key takeaway is that dividend investing, it's not just about chasing those payouts. It's really about finding companies with a solid foundation.
Okay. That have a history of rewarding their shareholders and the potential for, sustained growth.
Right.
And while we've focused a lot on, the numbers and the strategies,
Yeah.
there's another crucial aspect to dividend investing that I think often gets overlooked.
Okay. That's it.
The psychological side of things.
Oh, the psychological side.
Yeah.
Okay. I'm intrigued.
Yeah.
Tell me more.
Well, think about it. The typical investor's experience,
Right.
the market is constantly fluctuating. News headline could be, pretty alarming.
Oh, yeah.
And it's so easy to get caught up in, the fear of missing out.
The FOMO.
Yeah, the FOMO, or the panic of a potential downturn.
Oh, yeah.
These emotions, they can really lead to impulsive decisions like selling off investments at the worst possible time.
I've definitely been there where I just feel like my rational brain just kind of takes a vacation
Right.
and I just want to protect myself from any losses.
It's a natural reaction.
Yeah.
But here's where I think dividend investing can offer a sense of grounding.
And stability. Those regular dividend payments, especially from companies with that long history of consistency,
Yeah.
they can serve as a reassuring reminder that what your investments are actually generating income,
Right.
regardless of the market's daily whims.
It's kind of like a beacon of hope.
Exactly. It's that steady stream of income
Yeah.
that can really help you stay focused on the long-term potential of your investments and, resist the urge to make those rash decisions based on short-term market fluctuations.
So it sounds like, it's not just about the financial benefits of dividends,
Right.
but also the psychological support they can provide,
Exactly.
helping investors, stay the course and avoid those emotional pitfalls.
Yes. And I think that's a really powerful message for anyone who's considering dividend investing. It's not a get-rich-quick scheme.
Right.
It's a long-term strategy
Yeah.
that requires patience, discipline, and a commitment to building a portfolio that truly aligns with your financial goals and your emotional well-being.
I think that's a fantastic point to wrap up on. We've explored the mechanics of dividends.
Yeah.
We've talked about strategies, potential benefits, and even the psychological
The
aspects.
psychology of it all.
Yeah. And, for our listeners out there, we hope this deep dive has given you a better understanding of dividends and how they might fit into your overall investment strategy.
Absolutely.
And, be sure to subscribe to our channel for more insightful deep dives into the world of finance and investing.
Yes.
And, leave us a comment below.
We love hearing from you.
We love hearing from you, your thoughts,
Yeah.
your questions. And what resonated most with you from today's episode? Until next time, happy investing.